The latest inflation numbers are in, and after a red-hot January, we are now cooling off. Welcome to the Big Money Show. I'm Jackie DeAngelis. With me, my co-hosts Taylor Riggs, Dagan McDowell, Brian Bremberg, and with us for the entire hour, capitalist pig hedge fund manager Jonathan Hoenig. Thank you for being here. A small but welcome dip in inflation as the markets keep a close eye on the Federal Reserve's next move. The big concern here, the looming refinancing of trillions of dollars in national debt. President Trump, however, says he's not worried about the chances of a recession.
Just specifically on the recession,
yeah.
Do you think there will be a recession?
I don't see it at all. I think this country is going to boom.
And while markets digest tariffs, prices are already coming down for American families. Egg prices have plunged nearly $2. They are lower than when Trump took office. It's a small win, but it does show progress is being made on the affordability crisis. Let's first go straight to Edward Lawrence. He is live for us at the White House. Hi, Edward.
Yeah, and the CPI inflation report came out, showed that cooling, that slight cooling, under 3%, now 2.8%. The core inflation, without food and energy prices, 3.1%, the lowest in about 4 years that we've seen. Now, the Federal Reserve will look at this and they'll say, well, this is a good report, but let's pause and wait. That's the indication. They're going to pause and see how this kind of all plays out here. It's good that there were no increases in this inflation report. Now, the White House Press Secretary Caroline Leavitt says this about the report, quote, President Trump is driving down costs through massive deregulation and energy dominance. The entire Trump administration will continue to focus on fixing the economy and inflation nightmare created by the Biden-Harris administration to unlock the golden age of America. Now, the CPI numbers will not put downward pressure on the markets. The Dow responding to the tariff back and forth that's still playing out, and the president is talking about that right now in the Oval Office. Both Canada and the European Union announced reciprocal tariffs or retaliation tariffs to the 25% steel and aluminum tariffs. The Commerce Secretary Howard Lutnick believes the policies unfolding will not cause a spike in inflation. Listen.
Let's start again. Let's take a step back and remember inflation, right? Inflation comes from a government printing too much money. The Biden administration having a $2 trillion deficit. You don't get inflation from having a tariff, because what a tariff says is if it's made in Europe, if it's made foreign, it might cost a little more, but that which is made in America does not cost more.
So while choosing a Tesla to buy yesterday, President Trump telling me that he's bringing about a fundamental shift in this economy. Mr. President, when you look at the market selling off, that didn't concern you, and
Nope,
where do you see it
doesn't
going?
concern me. I think some people are going to make great deals by buying stocks and bonds and all the things they're buying. I think we're going to have an economy that's a real economy, not a fake economy.
Now, the president says he's shifting this economy from one that's reliant on tax money and government spending to one that's relying on the private sector and standing on its own 2 feet. Back to you.
Edward Lawrence, thank you so much. Meanwhile, we've got market insiders. They're sounding the alarm. Some of them are anyway, but not everyone's that concerned. Goldman Sachs CEO David Solomon sat down for an interview with our own Maria Bartiromo. He sees upside.
The president is engaged with the business community. The administration is engaged with the business community. And that's a different experience than what we've had over the course of the last 4 years. But CEOs are excited about some of the tailwinds you mentioned, like the move to lower regulation.
All right, there's a lot to parse through here. Jonathan, I'm going to start with you because we had a market that was higher today. You had a temporary tariff sort of pause, détente with Canada. But then, of course, they came back today and they imposed duties on $21 billion worth of goods. That's when we started going south. The market was enthusiastic this morning about the CPI report. So let's start there, because we do see on certain things, whether it's oil prices at $66 a barrel or egg prices are coming down. So it shows that under President Trump, we are seeing an improvement. On the flip side, people are worried about the impact of these tariffs when they do materialize.
Yeah, and Jackie, you know, the uncertainty over the tariffs, I don't think it can be discounted. I mean, this is being literally made up on a day-to-day basis. What worries me even more as an investor is simply the trend in the marketplace. Today, you saw already about 150 new highs. Only about, 150 new lows, only about 30 new highs. So you've got a majority of stocks underneath their 50-day moving average. In effect, the trend is down. And, you know, you've got to look at the trend. You can't fight the tape. And as an investor, that's what makes me worried about this market right now.
And the soundbite from Howard Lutnick indicates that the administration is standing very firm on the fact that tariffs will not increase inflation. Taylor, I want to come to you on that because this is really important with respect to how the Fed is going to operate, how the markets are going to operate. We don't know where we stand on tariffs or what eventually they will be. But can you sort of settle the debate for us? Is it going to raise prices? And if it does, will it be offset by other policies?
Let me try to do my best for you. I love that in the soundbite that you played at the top where Caroline Levitt said we're trying to lower prices through deregulation. Those are the goodies that we talked about yesterday that we were not hearing enough about. Maybe we're starting to hear more about tax cuts and deregulation to offset any impact there may be from tariffs. I think the good news in the CPI data this morning, Jackie, is that within a basket of components within CPI, they track about 84 goods. Only 37% of those goods are now rising at prices above 5% on an annualized basis. Last 2 years ago, that average was 59%. So 2 years, 3 years ago, you had 60% of goods within CPI rising at more than 5%. Today, that's only 37%, right? So a lower amount of those goods are rising at fast rates. That's good for the Fed in terms of managing this. This was interesting. I'm glad that you asked me about the Fed. One note I was reading today said we now expect the Fed to stay away from mentioning all of these higher frequency rates and focus on the improvement in that 12-month inflation rate, which we think they will be happy with for now. But they add that caveat that if it were not for tariffs, this report would be very promising in terms of tackling inflation. But that uncertainty around tariffs, I think, is what the Fed might be a little hesitant on.
What do you guys think?
Well, I think this is a pretty darn good inflation report this month. I don't think it's getting enough credit. I actually thought it was going to be worse when it came in below expectations, came in at 2.8. I'm kind of, like, I don't have champagne in my office, but I was sort of like, this is good because everyone's out there trying to scare the world about tariff price increases. Yeah. That's not the issue. Tariffs are not going to spike inflation. It's a separate issue, and it has much more to do with the strength of the economy. But I also think we're overestimating how much this uncertainty is going to hurt businesses this year. Okay, I think it's hitting them right now. They don't know what to do. I'm with you. It feels like it's kind of going one way and the other every other day.
And who can make plans long term?
But here's what I'm saying on that. We're still 52 days into this thing, okay? I think the closer we get to the beginning of April, the more we're going to see that part of the story settle down, and the more we're going to see the part of the story on regulatory cuts and, more importantly, tax cuts really start to ascend. And I think at that point, businesses are going to have their own playbook. It says Trump's economic playbook on top of us right here. They're all putting together their own playbook, and it's going to take them. It's not going to take them months. It's going to take them weeks to do that. So I'm not fretting the uncertainty quite as much as others are.
I agree with everything you just said, and I delight that the professional panic peddlers were so disappointed when that CPI number came in, because they are trying to gin up fear in every corner of this land, particularly among consumers. I'm talking about all the screeching hawks in the media and the liberal politicians about, again, the tariffs and sky-high inflation, when they didn't give a flying flip about what happened to the American people over the last 4 years. So I hope that they're crying in their sandwiches over lunchtime.
I'll just have to ask, does the fact that over the last month the dollar is down and gold is not too far off from its all-time high? I mean, those are some legitimate examples that inflation isn't down. The rate's gone down, and not inflation itself.
Okay, the dollar. I think that this is a quick move into other currencies and kind of forward buying in anticipation of what might happen. I shouldn't predict, but that the dollar corrects itself and the dollar strengthens in the coming weeks, number one. The most important market, given the fiscal situation that we were left in by the Biden administration, running $2 trillion deficits, and as Ray Dalio has been talking about, the deficit at a projected level of 7.2% of gross domestic product, where it needs to be about 3%. The most important market is your longer-term Treasury market, because we need to not only refinance more than half the debt that's coming due. more than half of our marketable Treasury debt that's in public hands has to be refinanced in the next 2 years, Jonathan.
Yep.
It rolls over. And so if you've got the 10-year Treasury below 4.3%, the yield is up a little bit today, a little north of 4.3%. That is the most healthy sign for the American economy right now, because we're on the cusp of getting our financial house in order. Hopefully, if the Republicans have stones, we'll cut spending and you get permanent tax cuts and deregulation. And your note about businesses, I was writing down what you were saying, that people are overestimating how uncertainty hurts business. And it's what, so we're hearing from businesses publicly talking about their concerns out of this White House. What we didn't hear a lot of what was going on behind the scenes of what Biden and all of his minions were doing to businesses. This is from Mark Andreessen, the famous venture capitalist. Biden and the Democrats came for technology and business in a very broad-based way. Everything I will describe happened in energy, too. The problem was the raw application of the power of the administrative state, the raw application of regulation, and the raw arbitrary enforcement of that regulation, where they directly told technology companies, there are only going to be 2 or 3 AI companies in this nation. It is pure fascism. The government was going to control them. There are not going to be any new AI companies founded in this nation because you people are a national security threat. What President Trump's doing is the exact opposite, because prosperity and the future of this nation is in the hands of people in the private sector and out of the hands of government, and that is just delightful.
Essence line, deleverage the government, re-leverage the private sector. And I think we underestimate the power of that.
He is reawakening innovation, and that's what we need, and it also invigorates capitalism, to your point, Dagan.